Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Mathew and with me is
Smriti Choudhary.
There you go. All right, so like the name suggests, we will take you through the next half an hour of trade. And if you've got questions on a particular sector or a stock that you'd like to invest in, or in fact take a trade in, then you've got to send your questions to us on any one of our social media platforms, or indeed on the WhatsApp number that should be flashing on your screen as I'm speaking to you. Now, let me take you through the guests that we have today, and in fact, if we can, Smriti, do you have that in front of you?
Yes. We have Kunal Rambia, founder of The Street, and we have Vineet Bolinchkar. He's the head of research at Ventura Securities. But Alex, tell us, how are the markets faring at this point right now?
So there's a lot of chop and churn, and in fact, if we can pull up the Nifty 50, you will see that we are currently just about flat, but then we have had moments where we've had a significant recovery, and I will be asking Kunal about that very shortly. The broader market's doing quite well. In fact, if you look at the broader markets, they are outperforming, but you have the mid-cap index that is gaining currently about 0.6%. The small-cap index up as much as 0.8% or thereabouts. Let's in fact also pull up very quickly the advanced decline ratio, because that will give you a sense of how wobbly this entire session has been, and you've seen a very dramatic change in the texture of the market, and currently you have far more advances than declines. So while we're waiting for our fundamental guest to arrive, Kunal, very quickly, can you tell us what you're making of the expiry today, and also what the key levels are that you're watching? I think you're on mute.
Yeah, hi Alex, Good morning. So if you look at the overall performance on the Nifty, yes, we saw a massive correction yesterday, and that correction was right from the peak itself, and it was down by almost 1.2%. But if you look at the today's recovery, it's still struggling near to the yesterday's closing itself, where you can see the indices are marginally plus. I think this is kind of a dead cat bounce for now. The trend is definitely intact on both the indices, but we just have to wait and watch for a couple of days to see whether this is a new downtrend which we are seeing on the chart, or it's just a sideways consolidation followed by a positive movement. So for now, we're just cautious on both the indices, but yeah, keeping an eye on the today's high and today's low itself for the new rally to emerge.
All right. Thanks, Kunal, for that. Good morning, by the way. We'll start off with the questions right away. The first one is from Rashida, and she's talking about ITC. Now, she wants to know at what rate ITC can be bought. So can you suggest levels where is right now the good time, or should she wait?
So again, if you look at the chart of ITC since June 2023, so far the count has not done much. If you look at the support, it's at around 430 levels, and on the resistance side, that's at around 470. Right now, it's trading near to the mid level itself. So I would rather wait for the counter to come near to support. Say 440 could be a good level to initiate the buy. Stop loss can be 430 in that case. But for now, I'll just avoid this counter, wait for some kind of correction, and try to buy near the support.
Okay. Kunal, we've got Jerry that's asking about what you think about the likely closing for the benchmark Nifty 50. And that might be a little hard, right, in the near term to predict where it's going to go based on what you've also described. But would you recommend against an intraday trade for now, just to wait for a little bit of stability before you venture into the shorter end of the market?
So certainly, I'll be sharing my view, but again, just a request to our viewer that because I'm sharing the view on the intraday charts, it's going to be very short-lived. So support level on the Nifty right now is 21,150 on the futures level. I think 21,150, if at all held on for a couple of hours, I think we might see the closing near to 21,300 to 350 kind of levels. But at the same time, failing to hold this level, I think we might see the yesterday's low coming again. So be a little cautious and be a little flexible on the levels.
All right. The next up, we're talking about the counter NMDC. Now, we have Mohit, who's writing to us, and he has already bought shares at levels of 136 per share, and he wants to know if he should continue holding this stock.
Absolutely. We have seen the dream rallies in almost all PSU segments, and NMDC was not an exception. We saw the massive rally starting right from 115 levels and made a high of around 200 levels. So a bit of correction is still fine, but this trend is certainly intact. I think I would advise him to hold because his buying is very low. So he can just maintain a trailing stop loss which is at around 175. If the counter manages to remain above 175, I think this rally might just continue after a bit of correction and consolidation also. But if the counter manages to break this level of 175, kindly just revisit and see if the new levels are available at that point in time.
All right, so that's the view on NMDC. We've got Vinit Bolinchkar that's joined as well.
Vinit, when you come.
Vinit, can you hear me?
Yes, I can hear you.
Hi, good morning. Thanks so much for taking the time. Now, we were, desirous of discussing a particular stock with you, and hopefully my team has been able to send across our question on Piramal Enterprises, and I'm guessing that you've probably seen the news as well. There's an update that they've sent out with regard to the RBI's notification yesterday about alternative investment funds and investments into these funds by non-banking financial companies. It has said that the exposure to top AIFs is as much as 3,817 crore rupees, and it has also mentioned that it will adjust 3,164 crore rupees in its financial statements via capital funds or provisions. So I guess this is the first of many entities that will make similar disclosures. What did you make of it, and how significant is this?
So I think that it's going to have an initial knee-jerk reaction on the stock, and as we go further out ahead into the future, I think these would be the norm. And hence, to my mind, I think the best way to play this stock is to kind of let this event play out, let the profit taking happen, and then try to buy the dip whenever the price settles down.
All right, so buy on dips for Piramal from Vinit. Kunal, do you concur? Is that what the charts are showing as well?
So if you look at the overall formation of the PEL, this counter has not done much in the recent past also. The extreme low was seen somewhere in the March where the counter made a low of 630, and from there it recovered to around 1150 mark. And the recent correction is somewhat near to 61.8%, which is known as the golden ratio in the Fibonacci. So I think, this seems to be a good support in today's session. In fact, it's making a doji formation with a hammer kind of, that's bullish formation on the technical language. So overall, I think the levels to watch out will be 830 to 835 on the spot level. So if the counter manages to hold these levels, I think one can initiate a buy with the minimum stop loss of around 800. And if this rally, which we are witnessing since March so far, if this rally turns out to be an uptrend, I think this can be a favorable entry for the positional traders also.
Okay, let's pull up the shares of BSE, and it's been a stellar run for this particular counter, and understandably so. I'm not talking about today, I'm talking about the longer term chart. So if you pull up the year-to-date chart, for example, you will notice that it has gained over 300%. Now, we've got a viewer who is bought at levels of 690. Vimal Vig is writing in from New Delhi, and he's bought at levels of 690, so he's making quite a bit of profits in this particular counter. He has 100 shares. He's asking whether he should buy more at this juncture or should he hold on to his position. I'll come to you on this one, Vinit. What do you make of BSE and the run-up that it has had so far? Do you think that it is overdone, or do you think that there is still value to be found at these levels?
So, I think, BSE as a platform with India growing and the kind of market cap and wealth creation that we're going to see happen over the long run, would suggest that, you be invested in the stock. And if you have bought it at those levels that you mentioned, it would be better to just hold on to this stock from a long-term point of view and, just sustain the wealth creation that plays out from here.
Okay, I also want to take a technical view on this one. So Kunal, on BSE specifically, so we've gotten the fundamental view from Vinit, but what do you make of the charts?
See, again, a massive rally was seen, and this counter has even multifold returns. So certainly a kind of sideways consolidation, which is likely, and that's what even we are witnessing since November. This counter has been in sideways consolidation, and I think the good support which is formed on the chart now is 2050 mark. So till the time this counter is about 2050 and 2000 kind of zone, I think we should not really be worried about it. Let's hold the position for now and ride the rally. But one thing is very sure, that as the counter continues up rally, I think we should trail the stop loss equally. That's equally important. So for now, it's 2050. If it makes a new high, then I'll trail the stop loss to 2200 and I'll hold the position.
All right. Next up, we have a question from Arvind Kumar from Kannauj, and he's talking about PNB, and he wants to buy these shares, and his time horizon is 10 years. So, Vineet, considering it's a really long time period, is it a good time to buy the stock and hold on for that long?
So, since he's looking to buy PNB from a very long-term perspective, I think a better stock for him to buy would be Bank of India, which is of a similar pedigree as PNB and available at a far cheaper valuation than that of PNB. And if your horizon is that much long-term, then you might as well give yourself some margin of safety. So while PNB is not very expensive at one-time book, Bank of India is available at a significant discount to the book value, and hence it offers that much more margin of safety. Also, we believe that the bank is getting aggressive, and hence we could see some better traction in terms of earnings from that stock, and hence better appreciation potential from there.
But Vineet, you haven't mentioned State Bank of India at all. Generally, when people talk about the public sector banks, they also mention State Bank of India. Does that indicate that you feel that it's gone a little too high? Or do you think that...
No, not at all, not at all. I think State Bank of India at 1.1 times book FY26 is damn cheap, and it should ideally trade in the 1.7, 1.8 times book if you take into consideration the other subsidiaries of the company which are, making profit creation is faster because of the growth trajectory that is there of these sectors. So obviously SBI also classifies as a fantastic buy in my opinion, but since he was looking at the pedigree of a slightly lower market cap stock, I thought that, keeping his, guesstimating that he was looking for a slightly better bargain, I thought Bank of India would be definitely a good pick in place of PNB. But SBI is also a fantastic pick.
Fantastic. All right. I'm hoping that you have coverage on Apollo Microsystem, and I'm coming to both of you on this one. Vineet, first to you. We've got Akshay from Varanasi who's writing in, and he's bought 6,000 shares at a level of 42. The stock is currently trading at 115 or thereabouts. So he does point out that he had booked a little bit at 110. He's wondering whether to exit completely or to keep holding based on what you think. So Vineet, first on the fundamentals.
So the fundamentals are indeed attractive, but the valuation of the stock has run ahead way too far too fast. And since he booked his profits at 110 earlier, I would suggest that he carry that stop loss of 110 for the rest of the position that is there on the stock.
Okay. Kunal, do you concur with that stop loss that Vineet has just pointed out?
Well, certainly, yes. If you look at the overall formation again on the chart since listing of 2018, this counter made a high of around 47. It took almost 2 years, 3 years to cross that level, and now it's trading near to all-time high. So, and this seems to be a perfect higher top, higher bottom rally even on the daily and the weekly chart. So I think the trailing stop loss here can be 95, though Vinith sir is, I think, trying to be a little conservative on the exit point. But on the technical front, the support seems to be right now on 95 levels. I think with 95, definitely he can hold on to the position.
All right. Next up, we're taking Tata Motors, and this one's from Sakshi Chauhan. She's already bought shares at 688 levels. The stock currently is trading around 708 levels. She wants to hold the stock for more than a year. Vineet, tell us about the fundamentals of the company and how does it look in the longer term?
No, definitely great stock to buy. We have the target of 710. But we had done that much earlier. Since then, a lot of fundamentals of the stock have picked up, and we expect that a price of 800 could be achieved over a year's time. But just for safety's sake, I would recommend that she hold the position stop loss of around 670, given the fact that we've seen a CV cycle run out for the last 2-3 years. So you're at the end of the bullish phase of the CV cycle. And given that kind of point, I would suggest, strictly adhering to the stop loss on not getting too emotionally attached to the stock just because, it's a pedigree Tata stock.
That's a very important point to make. Would you like to weigh in, Kunal, just on this particular one, on the charts? How does it look?
So yes, the trend is certainly intact, and this counter is also making higher top, higher bottom, but the momentum is fizzling out. To be very honest, on the daily chart, we can see a rising wedge formation, which seems to be like a scary formation as of now. So, but yeah, I'll trail the stop loss and I'll keep it at say 675, and I hold the position for now. If that's triggered out, definitely I would think of even shorting the counter. But I will not be keen to add more position at the present level.
Okay, all right. So there you have it. I hope that answers the question on Tata Motors, and I'm sure there are a lot of you tuning in have this question as well. Nestle India is another stock that has been in focus, and for obvious reasons, the stock is going to split not too far from now. And the question coming in is from Sridhar, asking whether this is a good point to buy. Vineet, what do you make of, one, the business and also the action to split the stock? It will likely lead to a significant increase in volumes, particularly for this counter, right?
Yeah, definitely. And, today, if I want to buy even one share, it might be keeping a large number of retail investors away. But with the stock splitting, it would be more affordable to buy. And I believe that it would enhance liquidity. And in my opinion, the company has got several brands which are leading in their own right in their respective verticals. Growth story is intact, and they're doing a huge capex of 5,000 crores. Okay, for a FMCG company, which typically, the other FMCGs generally outsource their manufacturing. Nestle is one company which does it in-house. And this 5,000 crore capex should not be taken lightly. And I'm definite that this stock will scale, give you 20-25% CAGR returns over the next 3 to 5 years. So be invested in for the long haul.
All right, we'll slip into a short break for now, but we'll be back and take a lot more questions. Stay tuned. Welcome back. You're watching Ask Profit. Do keep writing to us all your stock-related questions on the WhatsApp number that's on your screen. You can also write to us through any of our social media channels. Now, let's resume the questions, and this one is coming from Karthik. He's already got an allotment of Inox India that got listed today. And even though the listing was at a 44% premium, it's lower than what the grey market indicated. Vineet, tell us if, looking at the fundamentals of the company, if people who've got the allotment in this stock should continue holding this, especially for the longer term.
So, it is my belief that, we seldom come across stories where, you can confidently say that, the stock is a buy for keeps. And I think Inox India is one such stock which can be, safely assumed that it will have a 10-year bull run. The reason for my saying is that, they have got expertise in the cryogenic vessel space. And this sector is just, picking up. LNG, pumps. You talk of LNG fuel as for CV vehicles. All these require cryogenic vessels. And it is the third largest player in the world, despite having only a single-digit kind of market share. And, if you see they're a cash-rich company, they've adequately provided for their future capexes, and they do not need any more funds. They have got very strong balances. And in terms of technology, very highly regulated sector, having significant moats. And another plus point is that, they're extremely asset light. So this makes for a veritable, high leverage and high ROE kind of company. And we expect the trend to only catch up. So notwithstanding the fact that, all the triggers that I mentioned to you, even if they don't take off, the company will continue to grow at 20% because they have a 76% export book. So given all these factors, I think that this stock can be accumulated for the long term.
Okay, but having said that, we're still sitting on 40% of gains in trade today on listing day, right? So would you say that at these levels also it can be accumulated, Vineet?
Definitely. Given the kind of outlook that I have on the stock, I personally would not mind buying it a little expensive rather than miss out on the golden run.
Okay, I'm actually hoping that you have a view on this. The reason I say this is because I'm talking about Ultra Cab here, and it's a share with a market capitalization of just about 233 crore. We got a viewer, Vamsi, who's asking about this. Is this a good buy for the long term? I was trying to find out what the company does, and it is apparently a manufacturer and exporter of electric wires and cables. So, Vineet, first to you, one, do you have coverage? If not, in the wires and cables business, would you have another recommendation?
So, we do have coverage on the wires and cables network, but not on this particular company. And what I can tell you is that the export market is extremely lucrative. So you get better margins, and hence this stock can be accumulated because the growth factor is very, very high. And the way the world is moving towards, from fossil fuels to electrical kind of power setup, I think there is a long roadmap in terms of growth prospects. So definitely remain invested out here.
Okay.
All right. Next up, we have Anusha, who's asking what stock she should buy, and she only wants to hold this for a week till the end of December. So, Kunal, I'm going to come to you on this. Across the spectrum, any stock that might give returns in the next 1 week by the end of 2023?
That's gonna be a little tricky question. Reason being, again, just a week is a very short time. But yeah, if you want to look at, I think Nazara Technology is looking good. If you look at the overall structure, the counter has given a fresh breakout at around 850. It went up to almost 920. Yesterday's correction brought it back to the same level. I think with the stop loss of 850, one can certainly buy. I don't know whether it will move in a week itself or not, but I think this is offering good risk-reward ratio. If at all it gives a bounce and gives you the exit near to 910 kind of levels, you can certainly take an exit from the short term, but otherwise the trend is really intact. I think this counter can be seen from the short term to long term perspective.
Okay. All right. A couple more questions and we'll take this quickly because we've got 2 minutes left. Pratap is asking about REC. He's asking whether there's still possibility for a run-up from this stage. He's bought at levels of 235 and the stock, as we know, is close to 400 or thereabouts. Yeah. So, Vineet, would you say that it's a hold at this point? Would you say that you should still buy REC?
So they came out with commentary that they look to 10x a book over by 2030. And that, to my mind, is quite positive. But, the stock has run up quite significantly and, the retracement has also been sharp since the highs. So I would recommend holding onto the stock if you are having it, or booking part profits and re-entering at lower levels. Once the kind of exuberance has kind of petered out.
Right. Next up, and this is probably the last question that we're going to take for the day. This one's from Krishna. He's talking about Vakrangi, and he says he wants to buy the stock, but now there's a slight uptrend today in the stock. So, are there chances that this stock might go down, and then it'll be a good time to buy the stock? Kunal, how does it look on the charts?
So, there are two types of initiating buys on the technicals. The first is obviously buying near support and the second is on the breakout. I think I'll wait for this counter to give a clear breakout. Since March 2023 so far, this counter has tried crossing the levels of 21 almost 3 to 4 times, but it was a failure. So I'll wait for this counter to give a breakout of 21 and then initiate a buy. I think that can give us a rally till 24.5, 25 kind of levels. But for now, I'll certainly avoid these whipsaws which we are witnessing on every day.
So sorry, but I absolutely promised my next viewer, Marut, that I would take this question. So Vineet, very quick answer. Devyani International, based on the Thailand acquisition, would you suggest a buy at this point?
The management is very frugal in the way it operates its businesses. So, one thing you can be assured of is cost efficiency. And if they are bringing in cost efficiency to the table, I think that business can add to the business. However, there's concern that, overseas M&A can dilute the business. But I believe that Devyani management has got good handle on the business that they operate in. And hence, I will be looking to buy this stock.
All right. Gentlemen, thank you so much for taking the time. And viewers, thank you so much as well. That's all for this edition of Ask Profit. Do stay tuned. Lots more coming up in just a bit. This is NDTV Profit.